Partnered by Times Influence.
Paperless access to financial products will transform India by ensuring financial inclusion of our entire population. With this theme in mind, BankBazaar and ET Now organized the Paperless Finance Conclave, which saw a host of experts share their views on the subject. The evening kicked off with an opening address by Adil Shetty, CEO and co-founder of BankBazaar.
Welcome everyone. It's great to have all our partners in one forum. I want to start with an important question. Can 2018 be the year of paperless? I think India is in a unique situation. Let me call out a few of the key data points. We have about 50 million e-commerce shoppers in the country. We know the number is going to go to 200 million by 2020. That's 150 million new internet-savvy consumers who are coming live in the next 3 years. A predominant portion of this interaction is happening on the mobile. So one very interesting data point, right, is 66% of the transactions on BankBazaar are happening on a mobile device, not on the desktop. The new internet generation, what we refer to as maybe the Amazon generation, is not willing to leave their phone number and then have someone come meet them for 6 months bank statement, 3 years income tax. They want to be able to get that paperless experience. And thanks to what innovation has been brought about by our financial service partners and what the regulator allows, paperless financial services is the exact solution to deliver that kind of frictionless product. For the 4 reasons listed above, we genuinely believe that paperless access to finance will transform India in 2018. Firstly, it allows access for all. The technology is ready today. We're in a very interesting environment where the Evidence Act is updated. The Information Technology Act is updated. How do we deploy this for the Indian consumer? Reduction in cost and NPAs. NPAs have been a hot topic. And lastly, right, customer acquisition will come with paperless, right? So it's not as if the same number of customers are coming and you service them faster, but when you give them a paperless experience, which is a 10-second experience, volumes will spike up because people will hear about the product and people want to consume great products. So welcome everyone. The future will be paperless. We are so honored to have 85 financial institutions in the room. Let's have a great discussion. Welcome.
Amitabh Kant, CEO of the Niti Aayog, shared his views on the topic reforms in the financial sector via video link.
This is a very significant conclave, and my views are that India's use of cash as a proportion of GDP has traditionally been on a higher side, crossing 12% mark in around 2007-8 and averaging since then about 11 to 12% during the last 5 years. If you contrast this with cash to GDP ratio, it's just about around 3.9% in Brazil, 5.3% in Mexico, 3.7% in South Africa, and so on. Now, personal consumption is also highly dominated by cash payments, reaching up to 95% of total personal consumption expenditure. Various other developing economies, especially in the BRICS region and Indonesia, have been successful in achieving an optimum cash to GDP ratio of 3 to 8%, despite some of them having lower capacity under digital infrastructure. We are, as a country and as an economy, we are characterized by very, very large proportion of informal enterprises. But I think there is a huge opportunities. There are new opportunities in India's financial sectors, which are extremely immense. India can become the hub of global innovations in financial technology. India is very rapidly moving away from traditional banking towards digital transactions and banking. Paperless financial services has very numerous benefits, huge benefits. Paperless applications have 300% higher conversion rate. Paperless applications have significantly lower NPAs as there is no intermediary between the customer and bank, and there is very little chance of a document being forged by the borrower. And to my mind, Indian consumers is truly ready for the big leap, for the paperless banking. We should all aim for cashless, paperless, seamless banking. And in this world, in today's digital world, time from application to disbursement of loan should be a flat 5 minutes, nothing more than 5 minutes. And if you look at India Stack, it's a public asset created by government for paperless banking. It's a complete set of API for developers and service providers. You look at eKYC, the entire infrastructure rests on 4 pillars. eKYC, which is based on biometric authentication or OTP via Aadhaar. eSign, which is a digital signature acceptable under the IT Act. The DigiLocker, which is a digital issuance, storage and authentication of documents. The unified payment interface, cashless payment for financial transactions. So my personal view is that together the India Stack enables apps that could open up many, many opportunities in financial services. They will open up opportunities not merely in financial services, but also in healthcare, education sector of the Indian economy. We are in the midst of a very, very major revolution. To my mind, we are heading for a paperless, cashless, very seamless transaction, simply because the benefits of technology outweigh anything else. Mobile smartphones will be available at very low cost. Internet penetration is going to rise. It will be possible for us to do transactions in matter of minutes, and I think there will be no leakages. The intention is, if India's productivity has to rise, if India has to become a far more efficient economy, then we need to push for paperless, cashless and seamless transactions. That's the way we'll have a big revolutionary movement forward. Thank you very much, ladies and gentlemen.
Welcome back. The first panel of the evening saw luminaries from the industry discuss the topic access to paperless finance as a game changer for citizens and industry.
Being at Standard Chartered, straight-through processing is something which is key to you. You've been driving that. Could you share some plans that you have for India on straight-through processing?
Yeah. So I think one of the key anchors of our strategy has been the change in consumer behavior. We're seeing customers coming less and less to the bank branches. As a foreign bank, that's delightful because we have very limited branches. So clearly for us, digital onboarding and fulfillment digitally is one key aspect of our investments. We have something called what we call an accelerator lab. We have agile development in Standard Chartered. So accelerator lab actually focus on human-centric design, and that is one of the key components of how we are designing our digital. The second thing is it has to be end-to-end. There can't be any breakages in the end-to-end journey. And also what we're working on is something what we call agile development. So where the business people, the programmers, everybody gets into a room and it's done end-to-end quickly. The testing, everything is done in an agile atmosphere and people disband. So it helps to do the development much faster. So these are the few things that we've started doing.
Arvind, the HDFC Bank personal loan is the market leader. You have this product in 10 seconds, which is available, and it's been almost 2 years. Can you just share how you built it and how it has led to an increase in customer acquisition?
I think let's understand fundamentally the customers at the center of all our processes. So that's how this whole journey started. So once you have the customer in the center, then the next thing which comes to you is what is the simplest and the easiest way to deliver a process to him. So if you look at even the ecosystem around, you look at even kids. Kids are growing up in a world where they're adapting technology so much faster than many of us are. And why are they adapting so much faster? It's images and it's clicks. So if you adapt processes which kind of walk this road and make it extremely simple, then you find customer adoption or acquisition, as you mentioned, really goes up almost 10x.
I read recently that 20% of Mac's life sales happen via internet and mobile. That's a staggering number. Can you tell me how you've built that and what your experience has been around, this, I think, Amazon age that we're talking about, Amazon generation that we're talking about?
Sure. Thanks. Just for the record, it's 21% of customers, yeah, but it's not the total value of premium we write, so that just want to be kind of right about that. We did more work to actually create what we call our customer personas, and we finally homed in on 4 kind of customers we were dealing with. One was the support seeker, persons who are actually early in the journey of financial awareness and therefore need a lot of hand-holding as they kind of go through it. The other was the safety seeker. He's basically preferring safety over everything else, and that's all that he cares for. The third was the well-informed, knows what he wants to buy, but needs an interface to kind of get there. And the last was the independent, doesn't need anything from you. You just have to make yourself available. He'll pick, choose, buy, do whatever, right? And based on these 4 personas and their understanding, we then created 4 different customer journeys. So this is where, again, digital and paperless helps, because you can actually customize to that particular segment that you're going after and make it relevant for them.
Jesh, what are your views on access to paperless finance in India today?
Many times the compliance and even the legal heads, the concern is that tomorrow if something were to go wrong, how do we prove that we did a bit and we did the right KYC, tick the boxes and all of that? And some paper is missing. Now, if you have digital records and origination itself digital, and again I come back to blockchain technology, which makes it also secure and leaves an audit trail as to who accessed what, when, and for what purposes. I think it's a game changer then, right? Because it's transparent. You don't have to worry about are you maintaining all the records, how long are you maintaining, etc. And also look at from the cost perspective.
You see a lot of data on BankBazaar. This Amazon generation, the internet mobile generation, why are they okay with paperless?
We've been astounded by the fact that 60% of consumers in return for getting their product on the same day are willing to go through the process. I think more and more people are gravitating to the internet as the starting point. So compared to using other channels, word of mouth, friends, they're using their phone to get information. And when we're able to give them that instant experience, we're seeing that the increase in throughput is not a 1.5, 1.6x, but if you can deliver without having any friction, the returns to frictionless, right, will be 10x. I think those are the key trends I'm seeing, Naveen.
What do you think, in your mind, is the key benefit of paperless finance?
Mr. Kant was talking about the huge potential in MSME, and 90% of which is in unorganized sector. Now, what is going to be the future? This is a huge untapped demand available for that. So what thought process is going on? Like, this black box underwriting through fintech companies, where instead of obtaining papers for various underwriting requirement, if through APIs, these fintech companies can link to the MSME and obtain the required data with the consent of the customer for underwriting, it will be seamless ongoing underwriting for providing ongoing finance to MSME. Right. So this is going to be a key benefit for that sector. Retail, obviously, as an individual today, no one has time for submitting any paper. We have all the papers readily available with us in our mobile. And at the click of a button, we can submit. So why should we be asked for that document?
Manoj, maybe one benefit that you would want to highlight as a key benefit, either to the consumer, to the issuer.
What we have seen at American Express is, despite all these impediments which are there, the customer friction is something that, if the journey is good, then customers are ready to go that extra mile. And when I look back 3 years ago, maybe 3 to 5% or maybe 8% of our total acquisitions were digital. This year, 40% of our acquisitions will be digital. Next year, we are doubling that number. And this is, at the end of the day, it's a self-select channel. So the customers are choosing to do that. If these impediments are removed, right, those numbers are going to go through the roof. Right. So it's all about customers who are out there wanting to leverage these channels.
Welcome back. The next panel discussion saw the eminent speakers share their views on the topic, what will it take for paperless onboarding to be a reality?
Do we see that this new tech-savvy customers, this new segment, the millennials, pushing the banking system, challenging the policy makers behind the banking system to rethink? And I put this question first to Mr. Deepak Sharma.
So I think I fully stand by the statement here because we strongly just not believe. We have seen the success of a do-it-yourself, digital, paperless, instant, real-time customer experience. As we launched 811, that you all know, we launched about 4 months back. It was not just another product. Our idea was to double our customer base in 24 months. We were at 8 billion customers. We want to move from 8 to 16 million customers. So that's a big audacious goal that we have put when we launched 811. And I must say in the last 4 or 5 months that we have been on this journey. We have seen strong momentum growth in terms of acquiring customers across the geography where we have presence.
Can I have your views, Shinjini, on this as well?
What is happening very fundamentally is that bank is not necessarily the landing place of a consumer most of the time. So what's happening is that, and that's to your point of increasing irrelevance of branches, because one doesn't get up in the morning and says, you know, it's a nice day, let's go to the bank. So in the same way, one doesn't look for the bank and then think about how to spend their money. One thinks of the use case which is of the money, you know. So when you think about your saving, you think about the goal that is related to your saving. When you think about moving money, you think about to whom you are moving money. So it's becoming more and more fractured in that sense. And therefore, the expectation of the consumer is that the bank should be available to them where they need the bank. And to that extent, I think banking has tried to match up to that expectation of consumers, because if you see most taglines of banks now, it basically says, I am available where you are. And that could be commerce, that could be, you know, simplest is money transfer, but then you have to think about even lending or even buying insurance. So even for slightly more complex financial need, the consumer expectation is that the bank will be available to him.
RBI's noteworthy circular of 8th December, which attempted to, you know, open up to the eKYC process. Was it to test the waters, or was it some apprehensions, some concerns that were there which led to those limits? Can we hear it from you, Mr. Kar?
What we issued in December 16 was a little guarded approach to what we started. OTP based is based on the mobile. At the end of it, is based on the mobile.
True.
We have concern about the frauds happening in mobile, the SIM swap, the rural areas, entire family owning one mobile, and deceased person mobile used by some others. So anything can happen. Anyone can have Aadhaar details and mobile of some person. He can always get the OTP based confirmation. So that's a major fraud area, and that fraud is happening. To begin with, we started with the guarded approach. We see the response. Then we decide to go ahead. Initially, if you are aware, we are even not in favor of it. Then with, in consultation with UIDAI, we started it. Now, but then we were getting feedback from bankers and other forums. Then we'll go ahead with this.
Do you think this ecosystem which is just developed is benefiting the insurance industry better, or they have adopted it better?
One thing, as is well known, is we have to give credit to IRDAI. I think they were the first regulator of the block to allow this eKYC. As a consequence, what happened was we were able to start showing that to both our distributors as well as to our customers as an option. And this, I'm talking about 2013, by the way, when this started happening. And one element which perhaps doesn't get enough notice and regulators are always concerned about is the fraud risk part of it. Mr. Kar also mentioned. Actually, this improves risk management very, very significantly.
So a question to you, Yugen, is that you've been with large law firms and you know how regulations are evolving. What is your point of view in terms of difficulty in adopting this? And number two, from an SBI card point of view, if you want to make a statement as well.
The legislation is there, however we are out here. So in terms of our thought process, because what I believe is that it is an evolution. And in that evolution, it is not only the customer, it is not only the company, but it is also an evolution for the controllers. So if all of us, we partner together, then we can definitely reach that particular evolution. Okay? Now coming back to the December circular, though we are a little bit, picked out of it, but I do hope that Dr. Kar, given the fact that now he's got ample time just to test the waters, that, in terms of the credit card industry is concerned, I think, if you can just bring about some kind of a change with respect to the credit card industry, number one, and also with respect to the 60,000, the thresholds which are there, the 60,000 and the 1 lakh thresholds.
Is CKYC here to stay? And if it is yes, should we represent to digitize it completely?
If a customer has done a KYC once, that should be available for everybody. It should be a reusable KYC.
Correct.
Can we address that problem? A, digitally. B, now because the ecosystem has also moved, before this came in, because this is really a slightly older method of physical upload. So PAN is one big database. Aadhaar is another big database. And with these two databases, you also have an issue of inter-regulator, because if you look at SEBI as a regulator, they have a certain set of KYC documents, KYC requirements. IRD has a certain set of KYC requirements, and RBI has a certain set of KYC requirements. And if you look at A intersection B intersection C, that is where the most important issue is. You will see that RBI has a very big thing which is outside of A intersection B intersection C, because if you look at all other service providers or regulators, their total number of customers are small. What we can do perhaps is to do tiering. And if you see wherever there is A intersection B intersection C, you do tier 1 and you give a green pass, and so on and so forth, so that you incentivize the customers to move up the tier, to start to get the benefit of many of the KYCs.
Does the regulator need to issue a circular for everybody to start adopting e-sign? Or just because it's the law of the land, I think we should start adopting it?
The basic problem that we are facing, and everyone keeps asking the question, is more than e-sign, it's e-contract, and whether they are legally valid and binding and enforceable or not. And look, you have to step back. You have to go to the basics of contract and see whether it's a valid contract or not, and whether it's wet signature or e-signature. If the tests which are there in the Contract Act of offer, acceptance, consideration, and all of that are complied with, the laws in India are already there. So it is a mindset issue.
The event came to a close with Arjun Shetty, CEO and co-founder of BankBazaar, delivering the vote of thanks.
We'd definitely like to thank all of you who have been part of the panels, all of you who have been part of the audience. I think this is a great challenge for our nation, that if we overcome, we will take, we will greatly improve the lives of many untold crores of people. Victor Hugo once said, no army on earth can stop an idea whose time has come. We believe paperless, presence-less, signature-less distribution of financial products is an idea whose time has come, right? Thank you all for helping us be part of that journey.
Partnered by Times Influence.